Let's talk about American Express merchant financing, and this is a review of the funding program. One thing I want to say here is that if you are thinking about funding your business and you have an existing relationship with American Express merchant financing could be a great option for you. Okay, let me first define for you what the program really is and how you can benefit from it. By the way, you are looking at $2,000 all the way to $250,000. Okay, so American Express merchant financing operates like a merchant cash advance for your business. If you accept American Express credit card payments, you can borrow up to $2 million. Even though the average that we have seen in the last 20 years is actually $2,000 to $250,000. Okay, but you are basically able to borrow up to $2 million if you have like a pretty good business model and fantastic cash flows. Okay, with terms with up to 2 years and sometimes 3 years, and the debt is repaid via a fixed percentage of daily debit and credit card sales. So the higher your sales volume, the more you pay. Actually, the more you pay that day. So a unique feature of American Express merchant financing is that payments can come from all credit card, but also debit card sales or just your sales from American Express cards. So this alone represented a departure, if you think about it, a departure from similar programs from, let's say, PayPal Working Capital, Square Capital, and Stripe Capital. And because those programs only get paid from the portion of charges processed via those services. So merchant financing loans are just one offering from American Express and should not be confused with American Express business loans. So just be clear on that point. So what do you need to apply for American Express merchant financing? Well, you might need to provide your business tax returns, your business bank statements, monthly statements from credit card processors, your tax ID number, so your EIN or American Express merchant account number, your credit card processor name and number, your social security number, and the business bank account details like your bank name, the routing number, but also the account number. So if you're thinking about American Express merchant financing, there are some other important factors for you to consider. Okay, one thing I want to say here is that you have to remember that there is an element of exclusivity. So basically, this funding program is only available to businesses that accept payments through American Express credit card or debit cards. Okay, because American Express does have debit cards too. So if you are seeking a maximum term of 2 years, your business must have accepted Amex credit cards for 24 months. So eligible businesses must generate actually at least $50,000 in annual revenue and $12,000 in annual credit cards or debit cards. I mean debit receivables. So what happens here is that they will look at your cash inflows and cash outflows. By the way, now your business must also be at least 2 years old, even though American Express has been known to actually waive their requirements. Okay, that even if you have a 1 year, like a 1 year of operational history, they will still work with you. And although Amex does not have a minimum credit score, you might actually increase your chances if you have at least a 600 to 650. Even though this is a business funding program, they'll still check your personal FICO score. So unlike a traditional merchant cash advance, American Express merchant financing requires collateral, especially if you are asking for a large loan amount. So MS cannot use real estate and motor vehicles, two most important forms of collateral. But what they want to do is they might actually accept business assets like equipment or inventory. So just be aware of that. And you may have to sign a personal guarantee for less than 35,000, especially if this is your first time doing business with American Express. That means that Amex could potentially seize your personal assets to make up for the loss in the event of default. Okay, and also one thing I want to say also is that American Express restricts certain industries based on the current degree of risk. You'll have to contact the customer service rep to see if your industry belongs to this group. So just be aware of that. So one thing I want you to really understand is that for American Express financing, you actually have a program that offers several repayment systems. First, you can have payments deducted from all credit cards or even debit card sales. In this case, Amex partners with other credit card companies to automatically deduct payments from your accounts. Second, you can deduct payments exclusively from your credit card receivables from Amex sales. You would only make payments on days when your business makes Amex sales. However, you must perform a certain number of Amex sales to qualify for this repayment system. Another option is having the other credit card companies send your receivables to Amex so they can deduct your repayments from this bank account. Lastly, you might qualify from daily ACH debits, okay, and from your business bank account. Now, this is a relatively common way to process automatic payments, especially for a small business loan that you got from American Express. So just be aware of that. And one thing I want you to really understand is that basically, instead of a traditional interest rates, Amex charges a fixed fee of 1.75% to 20% of the total loan amount. This comes out to approximately 6 cents to 26 cents on each dollar borrowed. So the longer your terms, the larger your fee. So that's important. And so, how do you apply for American Express merchant financing? Well, there are some preliminary questions. First, you want to visit the American Express merchant financing website and click Get Started. You'll be asked to enter your name, your contact information, basic info about your business. Okay. Then click Continue to determine if you are pre qualified for American Express merchant financing. And pre qualification determines if you meet American Express minimum requirements. So it is really convenient because you don't have to supply additional info without knowing your eligibility. So you got to see whether you are eligible or not. And you want to receive your preliminary offer. So after submitting the info, Amex will give you a preliminary offer. You'll also receive instructions on how to complete the rest of the application. And finally, you just need to complete the application. So you'll be asked to give further details about your business upon achieving pre-qualification. So I'm speaking here about business bank account details, total annual credit and debit card receivables, credit card processor name and number, tax ID number or American Express merchant account number, total annual business revenue, business owner's total annual personal income, business owner's percentage of ownership, the type of business entity, okay, and also the business owner's social security number. Next, you have to really also think about you have to receive your final offer. So if you remember, I said a little earlier that you have a preliminary offer and then you have a final offer. So after submitting your application, Amex will reach out to you again with the final offer. If you accept, funds should actually appear in your bank account within 2 to 5 business days. So, and sometimes it can be faster. I mean, it really depends on your location. Some city and states see actually a fast wiring of the funds. Okay, so what about the post funding? So once you have what's the post funding phase looking like? Well, with most repayment options, payments will automatically be deducted from your business bank account or your receivables. So from my experience for the last 20 years, what I've seen is that a lot of entrepreneurs will go with the business bank account option because then you can centralize all payments and you can really, let's say, not disrupt your receivables. Because if you accept the receivable options, your revenue, your cash inflows can actually see large gyrations, ups and downs, and this could be disruptive to your budget. But if you just if you tell Amex to deduct your business bank account, then you're centralizing everything. So that's kind of cool. Now, if you are going to go with either option, your receivables or business bank accounts, remember that if there are insufficient funds to make daily payments, you may be charged a late fee of $39 or 2.99% of the payment amount, whichever is greater. Okay. So now American Express also offers a prepayment discount or rebate. So what happens here is that if you pay off your loan in full before the due date, you may be eligible for a rebate of up to a 25% of your fixed fee. So something to really think about. So now, if you want to qualify for 6 month terms, you have 25% of the fixed fee, pay off the loan in 90 days, and you have a 10% rebate of the fixed fee if you pay off the loan within 135 days. For 12 month terms, you have a 25% rebate of the fixed fee if you pay off the loan in 180 days, and 10% rebate of the fixed fee if you pay off the loan in 270 days. For 24-month terms, you have 25% rebate of the fixed fee, pay off the loan within 360 days, and 10% rebate of the fixed fee, pay off the loan within 540 days. So if you think about American Express merchant financing, what are the advantages and the disadvantages of the program this year? Let me first talk about the advantages. American Express financing has numerous advantages over traditional merchant cash advances because if you think about it, you have convenience first. Convenience, but most importantly, speed of funding. So compared to other short-term financing options, Amex merchant financing is considerably cheaper. Their rates may very well be among the lowest in the entire merchant financing industry. And merchant cash advances are one of the most expensive forms of financing because most have very loose requirements. Applicants can usually have low credit scores, less than 1 year in business, and no collateral. On the other hand, Amex merchant financing requires collateral, at least 2 years in business, and at least 12 to 25,000 in annual debit and credit card sales. So these requirements give Amex less reason to suspect that their clients will default, and less risk means lower costs. So that's kind of cool this is really good from a flexibility point of view. Also, Amex merchant financing is one of the few financing options that provide an incentive to pay early. Okay, so you'll be really hard pressed to find another merchant cash advance that reimburses a portion of your fixed fee payments. If anything, you are more likely to come across a company that charges prepayment penalties and offers no reward for paying early. What about the disadvantages here? Well, basically, this financing program is only available to businesses that accept American Express cards. So if you are seeking 24-month terms, you must have accepted MS cards for at least 24 terms. So you have a lot of restriction there. So compared to the traditional MCA merchant cash advance, Amex merchant financing is generally harder to qualify for. Other options typically won't require collateral and at least 2 years in business. Some of them will work with companies that are just 6 months old, okay, 6 months old. And while Amex does offer high borrowing amount up to $2 million, the maximum term is just 2 years. That's not a lot of time to pay off such a large loan, especially if your revenue is going through some gyrations. Also, Amex funding time is on the slower side than the rest of the industry. So these days, it's not difficult to find a company that can approve and distribute funds in less than 2 days. So let me talk to you about the pros and cons here. If you think about American Express, so first of all, if you think about American Express financing, remember that on the plus side, you have a program that's suitable for small businesses, like very small businesses. It's not about the size of your business; it's about the business model. Where you accept receivables, how you accept receivables, through what conduit you accept receivables. Okay, it's not about the size of the business, and also rates are less expensive than traditional merchant cash advance structures. I've said this before. This is because the risk model for American Express is relatively lower than others. Okay, and that's why they are able to really let you qualify for a lower APR. There are no additional fees or charges. That's kind of cool. That's really good from a flexibility point of view. And you have a program that offers fixed fee rebates for early repayments. On the flip side, basically this program, I think I've said this enough. It's only available to merchants who process American Express payments. So there is an element of exclusivity there because American Express just wants to make sure you are actually you are remaining within their ecosystem, their credit card ecosystem in terms of payment processing. Okay, the qualifications are more stringent than most merchant cash advance structures. Okay, especially if you are in a specific state and like specific city and state that's more competitive, like New York or LA, for instance. The short repayment terms lead to high payments that can strain cash flow, especially if you see some little disruption to your cash flow and you have to really cover whatever deficit that you might have. And also, basically, American Express financing is currently not accepting new applications. So this could be a little discouraging for new customers who are trying to really get funded by American Express financing. But one thing I want to say is that if you ever get in, you will appreciate how fast they take care of everything, how fast they process the process paperwork. One thing I want to say here is that if you think about American Express, just remember that you are actually you can apply for more funding if you are paying back a loan. Okay, if you're currently paying back an American Express merchant financing loan, you may receive another round of funding. However, you just remember that you have to apply for renewal once you have paid off at least 50% of your principal. So this depends primarily on your business's financial health and your history of timely payments. Okay. Now things may be a little complicated in the sense that you have the possibility to understand that you have to look at your cash inflow and cash outflow. So if you have one loan outstanding and you want to get another loan, what about the payment, the monthly repayment, the monthly payments on your cash flow situation? Okay, that's really what you have to you have to manage. So, but the cool thing is that there are some industries like basically that actually are suitable for. I mean, how do I say it? For this kind of financing, like restaurants, retail stores, hotels. Those are industries that historically have been very good to American Express, so they will fund those businesses more. And what I want to say also is that if you are ever declined for American Express financing, you can actually try other forms of business funding. You can try bad credit business loans. You can try accounts receivable factoring, accounts receivable, let's say funding, okay? Factoring or funding. You can have invoice funding, invoice factoring. You can try equipment financing, business lines of credit from the likes of Blue Vine or others, okay, or Smart Biz. Or you can even try SBA loans. Actually, you have the possibility to try SBA loans, even though SBA loans has some requirements that you may not qualify for. One thing I want to say here is that just see whether or not you can get some financing from the very bank where you are currently at. So if you have let's say, a relationship with Chase or Bank of America, before going to American Express for merchant financing, try the bank and see if they have loans for you. Maybe you could be you could be getting loans from your bank, from your current bank, faster. You can get a business loan from the bank faster than with other institutions. In conclusion, to this conversation, I spoke to you about American Express Merchant Financing. I gave you the details about the program, okay, what you need to apply for this program, what are the pros and cons, and finally, actually, what kind of extras they have, extra conditions they have. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.